The weekend's drone strikes on Saudi Arabia's most valuable resource aren't just leaving a dark cloud over the area, they're weighing on the global economy too.
For the industrial world, the stock market will fall because when the price of oil jumps, that increases the cost for doing business for everybody.
On Saturday, multiple drones attacked Saudi's oil infrastructure. The resulting disruption has wiped out half the country's oil exports. That's 5% of the world's supply. Images released by US government officials show 19 points of impact. Although Houthi rebels in Yemen have claimed responsibility, the White House says the damage is consistent with strikes originating in Iraq or Iran.
If Saudi Arabia cannot defend its oil fields and the Houthi rebels are launching further attacks, then we will have a repeat of the recession of the 70s after the oil shocks, and which is really very dire for the global economy.
On Twitter, President Trump issued this warning. Saudi Arabia oil supply was attacked. There is reason to believe that we know the culprit and are locked and loaded depending on verification.
Well, you know, this president and his national security team and Secretary Pompeo, our nation's chief diplomat, keep many options on the table, particularly when it comes to retaliating against malign behavior and protecting American interests.
And despite the president's assurance that there's plenty of oil, the benchmark crude price spiked 20% in early Monday trade, and international markets are nervous.
Well, it will make a global recession much more likely because Europe is already in the throes of recession. Chinese growth in China is slowing down, and growth in the U.S. is slowing down. The last thing we need is a spike in oil prices and a disruption in oil supply.
An escalation in diplomatic tensions between Iran and the US certainly won't help the global economy either. Melinda Nucifora, TRT World.
Well, for more on the story, let's speak with Gaurav Sharma in London. He's an oil market analyst and columnist for Forbes magazine. Welcome back to Money Talks, Gaurav. Now, a 20% shock to oil prices, but since then we've had Saudi and American officials both say they'll tap into their reserves to mitigate that cut in oil production. Do you think we've seen the worst of the price shock?
You know, we've had a very strange trading session today. When Asia opened, as your colleagues' report rightly alluded to, we jumped by 20%. Then suddenly there is a bit of realism creeping in, saying, well, where from here? So the oil price then pulled back. Trump tweeting, there's plenty of oil in capital letters, saying he'll sort of release the SPRs. Then suddenly there's a bit of a correction. And then he tweets that they're locked and loaded, provided any evidence is given. And again, the oil price, as we sort of go live, is shooting up again. So very strange session, but I think, you know what, the worst is still yet to come, because right now what the market is doing is it's trying to sort of soak in the events of the weekend, and then where from here? So what will the Saudi response going to be like? You know, what are the Saudis going to do in tandem with the US? And I think that would determine where the oil price goes from here. So if it's a very sort of powerful response in the shape of attacking Iran, then I can see you could probably count in about a $10 to $12 uptick in the oil price using Brent as a benchmark. So we could be at 75, 80 fairly soon. But if it's sort of the conventional response of attacking positions in Yemen, rather tragically getting civilians caught in the middle and not per se going after Iran directly, then I think you'll see a bit of a neutering of the price, and we'll sort of be at the levels where we are at. But very troubling times indeed.
Interesting. So you think it's less about the supplies now and more about the potential response. But OPEC and Russia are saying that they're not going to be pumping more oil into global supplies just yet. Do you think this is the right move? Should they be acting sooner rather than later? I
think this is, well, maybe they're sort of trying to get involved in the a political tango that is there. But we must be cognizant of the fact that the United States is the world's largest producer of oil. The American president said he's going to release the strategic petroleum reserves. And then on top of that, American production, by some estimates, might even jump to 13 million barrels per day this year, or perhaps early first quarter of next year. So there is still, to quote the president, plenty of oil out there, and much of that oil is heading to the lucrative Asian markets. Now, that's also where the Saudis send majority of their supplies. So the market is calm precisely because there's a lot of American oil out there. Now, if this situation had arisen, let's say 2010, 2011, 2012, when there was not that much American oil out there, then we would probably be going to 100.
Now, the Wall Street Journal is now reporting that Saudi Arabian officials are apparently discussing the idea of delaying the highly anticipated IPO of Saudi Aramco, Saudi Arabia's state oil company. How much of an impact do you think these attacks might have on this IPO, which could be the world's biggest ever?
Well, first thing is the reputational damage. As you would recollect, and you and your colleagues would recollect at TRT, this IPO has been rumoured since the first quarter of 2016 when the Crown Prince Mohammed bin Salman first mooted it. Now, it's already been delayed several times over, quite simply. It was quite simply down to the oil price environment, and we had the oil price falling to $26 at one point in these intervening 3 years. Now this happens, and there is no way they can IPO until a risk assessment is done of where we go from here. So first problem is the reputational damage. Secondly, they had no choice but to delay. But then again, that date itself has not been pinned down. So you can say that they're delaying, whereas we never really realistically knew when that IPO is going to debut, because for the last 3 years, we keep hearing that the mother of all IPOs, the mega IPO, it's coming, but it never really reaches the corridors of investment.
Now, Saudi Arabia hasn't told us just when they think they'll get returned to full capacity in terms of their oil production. When do you think that might be?
I'm highly skeptical right now of what the Saudis are saying, and I think based on my modeling, if you look at typically how processing facilities are sort of maintained, and when they are shut down for maintenance, we typically look at about 3 months. I think, and that's not exclusive to Aramco. That would be applicable to any oil producer or any production facility. Now the Saudis are saying they're going to get it up in double quick time in a matter of weeks and not months. You have to take that with a pinch of salt. I think it could take as much as 3 months to bring the facilities back to full capacity. But you know what? They're saying that they'll do it in a shorter turnaround. I remain skeptical, but we shall see.
Yes, we shall see. Gaurav Sharma, thank you as always for your analysis.